All right, S&P 500 trying to eke out some green today. The Nasdaq's still under pressure, but we're close to highs, if not at them, for everything. So I want to bring in Scott Bauer, who's joining us, the CEO of Prosper Trading Academy. Scott, the question is, as we get higher on the market, VIX remains low. It's kind of plateaued here around the 12.5 to 13-ish. In fact, something that's pretty interesting is you've had a pretty decent correlation between the S&P and VIX, NASDAQ, and VXN. Pat Mullally was pointing this out to us a couple weeks back, and it's basically held. Tell me what you think.
Yeah, I mean, you think of the market going up, reaching all-time highs, and you think of maybe lows in the VIX, and it's certainly not anywhere where we were a week and a half or 2 weeks ago when we dipped down into the 11 handle, actually, briefly. So we've actually seen volatility rising just a tad. I mean, it's plateaued. Like you said, it's not anything, out of the ordinary, but it has been rising a bit as we've reached these all-time highs. And I think, I don't want to say that that is a recipe for disaster or need for over concern, but what I do think that tells you is that people, hedge funds, the like out there are starting to take some money off the table, at least by using VIX products, at least by using those sorts of derivatives to hedge these portfolios.
It's interesting, right? Because you've got a few things going on that almost kind of seem like they're at odds. You've got institutions through CFTC contracts.
Just a few.
These hedge funds, right? The speculators. And I know that you can argue kind of both sides and say, well, it doesn't represent the entire market, but at least some of these institutions right now are also shorting VIX, judging by their positions there.
Big time.
Right? Big time. And this has been going on for weeks as well. So how do we put the two together?
Well, everyone's going to look to that black swan event that happened a year ago, February in 2018, when early February the market, was down. The Dow was down over 1,000 points, and VIX spiked to 50, and it blew out a bunch of funds because they were short volatility. And so everyone's thinking, well, how can that happen again? And what you are seeing, Oliver, like you said, is a bunch of these big, massive funds shorting volatility. Now, you have to remember that for everything on the short side, there's also buyers on the long side as well. It's just a magnitude of, how much is behind that. And that scares me. That scares me. Not that we're going to have a black swan event again, but it scares me because you don't know what these funds are doing to hedge that short volatility. And like we know, we typically see vol pop a lot quicker than it goes down. So, we get one piece of headline risk, whether it be geopolitical risk. The Fed all of a sudden comes out and says, oh man, we're going to raise rates all of a sudden, which, is probably not in the cards, but you get something like that, and you could see a VIX 20 handle like that.
So this is what's so interesting, and for those watching at home, the chart here that we're looking at is two parts. The first is just the VIX, and the second is that difference basically between the short and the long for those speculators. Now the spread between there is what we're talking about to get that short position. You know what's so interesting about this, Scott? I don't know if you probably can't see it from where you are, but basically what happened is the gap that we're experiencing right now was basically intact for like 8 months, not to the same degree of extreme, but during that 2017 period. So the thing can last, we can, have this moment. It's just how rare do you think that period was, in 2017?
No question. And that also tells me that maybe some of these funds are trying to play catch up, right? Because you had the big run back in 2017 leading to what happened in February 2018. And if they weren't, fully vested or had a good chunk in the marketplace, maybe they were trying to make a little bit of that up by shorting volatility. Same thing could be happening now. The funds that maybe didn't get back in the marketplace after the December massacre, maybe that's how they're trying to make up some of that shortfall right now. I don't know what it is. To me, it is definitely concern. Again, I'm not concerned that we're going to have a black swan event again, but it is concerning that we're up at these levels here, and we're seeing, just mediocre volume in the marketplace too. It's not like we have big gangbuster robust volume, and this short number of VIX or volatility instruments that are out there is at record levels.
Yeah, and the other thing I'd say is that, look, the black swan type of event was exacerbated by the fact that we had all these products. Those don't exist anymore, so at least you don't get the additional, smack of those exploding. But that doesn't mean that if you have a bunch of big institutions who then are forced to, cover their positions or whatever, that causes volatility.
No doubt about it. And again, I hate going back again to February 2018, but what really caused that big market meltdown was the market freaking out about the 10-year approaching and eclipsing 3%. Right? So that was like the first time it had happened in a while, and that put that emotional trade into the marketplace, which sent volatility skyrocketing. That's probably not happening now, but we don't know what that next event could be. So there is something that could be lying out there, but I think that investors just have to take heed of that. And if you've been able to ride this big market wave to all-time highs, especially if you were able to allocate some cash after the December sell-off, I look at that and say, you know what? Someone's telling me to buy some insurance here, and someone's telling me to buy, even though it's not completely a fire sale insurance, like when VIX is down at the 10 or 11 handle, it's still pretty cheap. Why not do it?
Yeah. And the last thing I was going to say, with that VIX at 12, we haven't pushed lower into the 11 handle. We were just looking at the 10-day correlation between VIX and the S&P. It's basically the same thing if you look at NASDAQ and VXN, where it's a little bit unique in terms of what we're going through right now, which is a pretty high correlation, meaning that it has either climbed or moved sideways as the market has climbed or moved sideways. Scott, do you still view volatility at 12 or 13 as a cheap place to hedge? Have we just kind of naturally lifted the floor for maybe the VIX, given that those products are no longer there and aren't kind of suppressing it?
So two things. A, you're still right in the heart of earnings season with some big companies like an Apple that's coming out today that can affect the marketplace overall.
Yeah,
we got Google didn't really affect the marketplace, hurt the NASDAQ a little bit, but overall marketplace. But you do have some big numbers coming out that can affect the marketplace. But then on the flip side of that, if we happen to get through earnings season over the next couple weeks, things intact, this, that, and the other, I think you will start to see volatility really drop, Oliver, as we start to approach those summer dog day months of trading. I really do.
All right. Good stuff. Really good chat today, Scott Bauer. Appreciate it. CEO
Thank you.
of Prosper Trading Academy, talking some volatility with us. We'll be right back.